Joining us are Wim Boonstra, Executive Vice President and Chief Economist at Rabobank, and Holt, Vice President of Economics at Scotia Capital. Thank you so much for coming in. Every couple of months we say, gosh, central bankers have it tough. Central bankers have it tough because they had to go through the financial crisis. But now they really have to make sure that they don't choke off inflation by growth, by focusing too much on inflation. Wim, let me start off with you. Is there a concern that here in Europe we're going to raise interest rates before the economy can take it?
Well, I think the situation is very different between England and the continent. I think the European Central Bank has an extremely difficult decision to make, because on the one hand we know how fragile the Eurozone still is, and any increase in interest rates is bad news for the countries in the periphery. On the other hand, we know that the German economy is running very hard and needs higher interest rates, and for the credibility of the European Central Bank with the German electorate, which in the end we all need in Europe, it is of importance that it doesn't move too slow. So I expect some movement of the European Central Bank in the course of this year, once they have finished the problem that the ECB is stuffed with bonds from weaker countries.
For the UK, are you expecting something in the next couple of months?
Well, the UK, the economy, of course, is weaker, is relatively weak. Inflation is much higher. So on the one hand, you can say that the Bank of England should move earlier than the European Central Bank. On the other hand, you may expect that, given the weak state of the economy, that inflation will come down in the course of the year, and that's what everybody hopes. So I don't think that the Bank of England will move too quickly.
Derek, you're based in Canada. How do you see Europe and the UK? Because, of course, over there you have a completely different situation, and overall you're growing along with the US.
Yes, that's right. We have our challenges too, but I think if we look at Europe, I would argue on the side of the Bank of England having to remain on hold until late this year, if not perhaps even later into next year. I think that Governor King has been fairly clear in telegraphing to the markets that go ahead, impose fiscal drag, and from a government perspective, we will remain accommodative throughout that process. And secondly, he's pretty clearly communicated to the market that he expects inflation to go higher before it peaks, and then automatic drivers will cause it to drop off into next year. That doesn't sound like very hawkish commentary from a central bank head to me. But from a Canadian standpoint, I think we face a bit different dynamics going forward.
But Derek, if we just focus on the UK, if we have this accommodative interest rate until the end of the year, are we not going to see inflation spiral out of control?
I don't think so. I think because so far most of the inflation is coming from a commodity shock that's being imposed upon relatively weak household incomes, and so it raises the risk of crowding out discretionary income, which is broadly disinflationary for the rest of the economy. And we still have very, very weak UK housing markets, with the shelter component keeping a downward influence upon CPI right now.
Very two different views, Wim. In terms of the concerns for the UK, are we risking a double-dip recession if we increase rates and austerity measures start taking hold?
I think that the UK economy is relatively sensitive for interest rate movements. So yes, that's one of the concerns of the Bank of England, of course, that if they move too quickly, given the weak position of especially the consumers in the UK, it might harm the recovery and push the economy back into a recession.
We have a North American and a European, and it actually seems very clear that you have very different views on how you handle the world economy, also in terms of stimulus. I guess going forward, are you for or against stimulus at this point? Do we need to focus on austerity measures?
I think that every stimulus that could have been given has been given. I think that, for example, I feel much more comfortable on the inflation outlook in Europe than in the US in the long term, because I think that the situation is much more difficult for US policymakers and for European policymakers. And I think in England, of course, it will get more difficult if the European Central Bank starts to move, which will certainly do something with the exchange rate as well. And so that's given additional inflationary push to the UK economy. So I hope that you were right, and it's our baseline scenario still that inflation will come down in the course of the year, and the Bank of England does better to wait. But I think it's a very difficult situation.
Derek, do you agree?
I think one interesting development will be in the United States. I would expect stimulus to become more significant as we push off into next year, because in my mind, going into a presidential election year, there is no way that President Obama is going to campaign on the basis of allowing temporary jobless benefit extensions, the 2% payroll tax cut, and temporary tax cut extensions to expire at the end of this year and the end of next year, respectively. That's like a Democrat saying, vote for me and I'll hike your taxes and cut your jobless benefits, which will not resonate well with the American public. So I'd look for further stimulus spending, and that's that's going to create even bigger headaches longer run by 2013 when the U.S. is going to face European-style fiscal exit pains.
And so global imbalances, but also this cheap money coming into the emerging markets, creating asset bubbles if we have more stimulus?
Yes, and a concern in emerging markets right now is with respect to reacting too hastily to a commodity price shock. Many of these countries spend 40–50% of their household budgets on basic staples. And so that upward price pressure crowds out spending on everything else and is broadly deflationary in the rest of the economy. If we impose too much central bank tightening in countries like India or Indonesia, for example, on top of this commodity shock, we really run the risk of derailing these economies and sparking demand destruction.
Wim, do you expect more stimulus to be put in the U.S. economy, and what does it mean yet 2–3 years down the road if we have these so-called bond vigilantes stopping to focus on Europe but really, doing the radar in the U.S.?
Well, I think that they will change their attention from Europe to the U.S. because underlying already you see that the global imbalances are growing again. The U.S. trade deficit, which has decreased strongly after the recession, but it's increasing since the spring of 2009 already. German surpluses are growing, Chinese surpluses are growing again. So we're entering more or less the same macroeconomic environment we had before the bubble. So if you look at the business cycle in the short term, well, it's good, stimulus is good, it helps people to have jobs. But financially, it's in the long run, it's not sustainable. So things will change there. And I expect in the not too far future a major correction of the US dollar exchange rate towards the rest of the world. That's the only thing that would help to imbalance the global economy.
All right, we were talking about the global imbalances and how that's going to hurt some emerging economies, but then you look at what's happening in Egypt, and there's still a very big risk and a concern that this will spread to the region. Derek, are you concerned that what we've seen is just the beginning of the social unrest?
Absolutely. I think, Egypt's not the first food riot and the first political dissent that we've seen in the past few years. There have been about 60 on the global level, but going forward, I think it's just the thin edge of the wedge and across a number of emerging markets. In fact, I would finger about 24 emerging markets that face the danger combination of spending an awful lot of their household budgets on basic staples, food and energy, governments that try to rebate or subsidize the impact, and those subsidies are increasingly unaffordable, but they're only going upwards, in the context of deficit to GDP ratios across many of these economies that are in the 3 to 10% range, and inflexible political institutions. So we're not talking the top tier emerging markets being in trouble necessarily, like Brazil, Chile, and parts of Asia, but about 24 second tier economies that stretch all the way to Pakistan that I think are going to be in the headlines with a food shock and political dissent over the course of the next few years.
So I guess the frontier markets, is this also a concern? We've seen a couple of countries spark up, but actually it seems that overall this contagion that we're talking about, this immediate contagion, has been cooled off somewhat.
Yes, but I think that the developments in Egypt are extremely important because it will be the showcase what's going to happen in other countries. If they succeed and have a orderly takeover and move into democracy, it could, in the end, stabilize a region which inherently is unstable. On the other hand, if it becomes Iran Mark II, then the world economy and the world geopolitical situation has become extremely difficult. So it's very important that they manage the changeover carefully. And it's extremely difficult because emotions are so high.
A lot of anger in the streets.
A lot of anger, and the outcome is completely uncertain, but it will determine how the Middle East will develop in the decades to come, I think.
In terms, I wanted to change tack completely because there's also so much speculation that Axel Weber is going to step down. The French finance minister is saying, wow, I didn't know what was going on. Do you have any reasons to suspect why he's actually leaving? Is this a good choice? Do the Germans want to put someone else in his place?
I think, it's unclear as to whether he's fully leaving just yet, but I think it might be a reflection of the fact that he will not get enough broad-based support across the rest of the Eurozone in order to take a run at the presidency. And he's certainly not been a friend of the peripheral economies that are going to remain beleaguered over the next few years.
Wim, in 2 words, is he going to go or stay?
I think he will go. He'll either be another German or a Dutchman at the top of the ECB.
Wim, Derek, thank you so much.